Good evening, friends. Thank you very much for joining in. My name is KR Ganesh from HDFC Securities. And today we have a very interesting topic for discussion, which is the Motilal Oswal Nasdaq ETF. Now, Amazon, Facebook, Google, Apple, these are names which have become an essential part of our daily lives. We Now, while this definitely makes our life easy and interesting, we wanted to take you through how we as investors can participate in the enormous growth story which these very, very large companies have to offer. And to do that, we have with us today Mr. Pratik Oswal, who heads the passive investing business for Motilal Oswal. Mr. Oswal, thank you so much for joining and welcome.
Thank you, Ganesh.
And we are very, very eager to hear from you as to how Motilal Oswal Nasdaq ETF can form a meaningful part of our investors' portfolio. Over to you.
Thank you, Ganesh, and it's good to be back here. Thank you everyone for being here, and excited to talk to you about international investing. Specifically, talking about the Nasdaq ETF that we have, which we have been running for almost 8 to 9 years now. So basically, so when I joined Motilal Oswal mutual fund around 6 to 8 months ago, we're now sort of in process of creating a separate business on passive funds. And we think international investing through a Nasdaq also qualifies as a passive fund because it's passively managed. There is no fund manager making the selection of which stock to buy or sell, and it's typically tracking the index, which is the Nasdaq index. So what is the Nasdaq index? So the Nasdaq index is an index of the top 100 largest companies in the US that are headquartered in the US, and these are all non-financial companies. So these are the top 100 companies that are listed on the exchange, and the Nasdaq is just basically the top 100, which is market cap weighted. And the idea behind the index is for investors to get access to the largest companies in the world. So if you look at the Nasdaq today, it's got all the companies that all of us use on a daily basis. So you're looking at Apple, you're looking at Google, you're looking at Amazon. You look at all these tech companies, but you're also looking at other growth companies such as Starbucks, such as Amgen, and also guys like Pepsi. So the idea behind the Nasdaq ETF, is to expose Indian investors to diversify their portfolio outside of Indian stocks. Now, why is it important to diversify? So the reason why investors should diversify their portfolio is to protect their portfolios when things are very volatile. So for example, suppose tomorrow the Indian markets go down by 10% or 20%, normally Indian markets behave very differently from markets abroad. So if you have a part of your portfolio in international funds such as the Nasdaq, you're actually protected in this downfall. So the Nasdaq index or the ETF is basically all large cap securities. So you're basically buying some of the largest companies in the world. And the good thing about buying the largest companies in the world by an index is because this always changes. So the Nasdaq today has 100 largest companies in the world, and even 10 years from now, the Nasdaq will always have the largest 100 companies in the world. This is very important because for an investor, so I'll give a simple example. The Nifty 50 today, is 35% financial services, but the same Nifty 50 15 years ago used to be industrial, utilities, used to be oil and gas. So what the index does is it makes sure that the good companies always get upgraded and the bad companies get kicked out of the index over time. So what essentially you're buying is actually the 100 biggest companies in the world. And why should you buy a US fund? Why are American funds so good, and why should an investor look at specifically American funds to diversify the portfolio? And the answer to that is that actually Nasdaq is actually a global index. It's not really an American index. So if you look at all these stocks, if you look at Tesla, if you look at Google, Apple, Amazon, a lot of their growth is actually coming from their markets outside of the US. For example, the top companies, maybe 10 to 15% of their revenue is coming, or incremental revenue is coming from their domestic businesses. But almost I would say 60 to 70% of their growth in the business is coming from their operations outside in multiple countries. For example, for Amazon as well as Google, India is actually one of the highest growing markets for them. So by having a fund like the Nasdaq, you're actually playing on not only just because it's headquartered in the US doesn't mean it's a good fund. It's not a good fund to buy. You're basically buying a pretty globally diversified index. The other point to why I think international investing is great, and specifically talking about the Nasdaq, is the correlation. I talked about diversification and the importance of diversification. So if you buy, say, a large cap index, a large cap fund, or a mid cap fund in India, the correlation is actually quite similar. So when things go down, everything's go down together. So what we've seen is that when markets fall, they all fall together. Whereas in the Nasdaq, or if someone is exposed to the Nasdaq, the correlation is only zero point 0.2. So what does that mean? That means that if the Indian markets go down by 10%, the Nasdaq will only go down by 2%. So by having a very low correlation with the Indian markets, the investor is actually getting a huge amount of diversification in his portfolio, which will protect himself from any negative events happening in India. So one is correlation. The second important point to why investors should diversify is a dollar hedge. So Nasdaq, even though it's actually based out of India, is actually a fund that's based in dollar investing. So what does that mean? That means you're actually investing in the dollar in the index. Yeah. So for example, the Nasdaq. So let me give you an example of how dollar investing works. So when we launched the Nasdaq in 2011, since then the Nifty 50 has doubled. The Nasdaq fund in the US has gone up 4 times, and our fund, the Motilal Oswal Nasdaq fund, has gone up 6.5 times. The differential between 4 times and 6.5 times, 2.5 times what you would have got if you'd invested in it, comes from the dollar hedge. And we all know that the dollar used to be at, say, 40 rupees 10 years ago. Today it's at 70 rupees, and tomorrow we're pretty sure that because of high inflation in India today, the dollar would be at 100 rupees. So anyone who's looking to protect our wealth from a global standpoint, it's very important for them to buy an international fund like the Nasdaq fund. So anyone today who's looking to send their kids to school in the US, so I went to the school in the US, and I went there around 15 years ago, and it's actually if I had to send my kids today, it's actually almost twice the cost, because of the dollar depreciation. So I think anyone who's looking to buy something like an Apple iPhone, today it costs you 1.3, 1.4 lakh rupees, whereas the same phone at the same price, 10 years ago would have costed maybe less than half the amount today. So I think dollar hedge is extremely important, and I think every investor should take advantage of the dollar hedge and invest in international securities. The third is that profitability, or how the Nasdaq companies have performed over the last 10 years. So if you see profitability, the margins, the profit margins of a Nasdaq company of an average of the index used to be around 7 point or around 8%. That has actually grown to 13.5%. I think is huge. So an investor is actually buying a pool of companies that are a lot more profitable today than they used to be 10 years ago. Apart from that, even the return on equity, so as investors today, the most important financial statistic is ROE, return on equity. And typically, the average of an ROE of a Nasdaq index used to be around 12.5%, and today it's almost 23%. An average investor is actually making 23% in ROEs every year by just investing in Nasdaq, which I think is a very big number. Third is dividend yield. As we know, the US investors invest a lot more for dividends than do for capital appreciation. And I think going forward, all investors need to understand the importance of dividends in their portfolio. So if someone had invested, say, a lot of money 20 years ago, the dividends of that on today is absolutely astounding. So the Nasdaq dividends have actually increased almost 30 to 40% over the last, I would say, 10 years. So I think that's also something that investors and all these dividends are coming in also dollar denominated. So I think over time you're actually getting a 60 to 70% increase in dividends just by owning the Nasdaq. Lastly, which I think is also important, it's not the most important criteria, but it's returns. I'm not a big believer of chasing returns. I think an investor should do more research than just find the best fund and best performing fund and buy it, because what people have said is that by buying the best performing fund, you're actually I think over time it doesn't really work out well for the investor. So ideally, the investor should do more than just 3 to 5 year returns. An investor should do more research, should do understand a lot more about the fund, about the philosophy of the fund manager. Before taking a call on which fund to invest or not. Because as we know, every fund. I mean, today's good fund, the winners keep rotating. Every year, every couple of years. And in terms of returns, the Nasdaq has delivered almost 40% returns in the last 1 year. And from inception, I think this has been 20% plus. So I think the returns have been quite stellar. If you look at just the Nifty 50, it's done around 10% CAGR since we launched in 2011. The Nasdaq has done 24%, so 14% alpha over the Nifty, which I think is great because if you've seen all these stocks in the Nasdaq, they've done phenomenally well, and it's not only returns. Even the earnings of the Nasdaq is actually quite great. So the number one question investors ask me is, what about valuations? Just because it's run up so much, doesn't mean that it's going to crash. What has happened to valuations in the Nasdaq? And I have to say that valuations actually been quite stable. And the reason why valuations are still below average or about average is because the earnings of these companies have been absolutely phenomenal. So I think the Nifty actually valuations have gone up. So if you look at the top 50 stocks in India today, they are quite expensive. Above average, above historical average. But the Nasdaq, because the earnings have been so strong, the P ratios have actually been quite stable. So you're looking at about the average, long-term average. So there's a lot more growth opportunities for investors to invest in Nasdaq. Having said that, I think Nasdaq should be used as at portfolio diversification. So anyone who's building an asset allocation should have, say, a 5 or 10% exposure to international investing. So even if the Nasdaq is, so make sure Nasdaq is not a big proportion, because I think it's important to balance your portfolio in different asset classes. So I think investors shouldn't really worry about returns or whatever happens in the future, because we all know that the top 100 companies 10 years from now are going to be bigger than the top 100 companies today. So the Nasdaq will do well, and as we've seen from various indexes all over the world, indexes have done phenomenally well. So I think investors shouldn't worry about returns. They should be worried. They should be doing this for diversification. They should do it for dollar hedging. So with that, I'd like to conclude this short presentation on the Nasdaq ETF. We also, as an AMC, have an FOF, which is a fund of funds. So investors who do not have access to a demat account could also make the purchase through any mutual fund platform. Apart from that, I just want to end by saying that it's important to understand that so two things. One is that you have to be able to buy companies that you're consuming. So today, most investors, or at least me, or like a lot of people in, say, cities and across the country, have access to a lot of international products. So we buy Bata stock, but you wear Nike shoes. We buy the stock of Maruti or Tata Motors, but we own Kias and Hyundais. And I think also in terms of e-commerce, so we buy stocks of, say, retail companies like DMart, but we buy from platforms such as Flipkart and Amazon, which are all US companies that you can buy in the Nasdaq. So it's important to understand that over time, it's important to own companies that you buy to, and the Nasdaq gives you this good opportunity for you to own the companies outright, so that you can play on their capital appreciation for a very long time. Number one. Number two, I think also Indian companies are obviously will do really well over long terms, but Indian companies have not the one risk in Indian equity markets is that you might not be as competitive to global players. So I think to de-risk your portfolio, it's important to have sort of stocks or funds in the Indian markets as well as international markets, because as today competition is global, it's not local. And I think a portfolio with an international as well as domestic funds will make it quite less risky and a lot more, I would say, less volatile than not having international. Thank you so much.
Well, thank you so much, Mr. Pratik. That was quite an insightful session. And wow, we already have questions lined up over here.
Wow.
So, okay. First of all, regret the delay. Apologies for starting it 5 minutes late. So we start with the question. The first question is from Mr. Deepan Kumar Dave. US market is down. Is it advisable to enter at this stage?
Yes, yeah. So the US market is down because I think US markets have actually done phenomenally well. So Nasdaq fund is up almost 40%. I think yesterday it was down because of coronavirus fears. So, and I'll be honest, I mean, there are short-term, idly mutual funds or a Nasdaq fund in particular is something that I recommend for long-term investing. So anyone who is looking at, say, investing for long-term periods shouldn't worry about short-term blips such as coronavirus and other factors.
Okay, the next question is from Mr. Kayur Shah. In terms of liquidity, taxation, ease of traceability, etc., which one is better, Nasdaq ETF 100 ETF or Nasdaq 100 FOF?
Yeah, so ETFs in India per se are not very liquid. I think there's a big problem where I think ETFs are more sort of sold towards institutions and sort of the big guys, and there's not much retail participation happening in ETFs, which is the reason why I think almost every ETF in the country has no liquidity, and it's the same for Nasdaq as well. I think so we saw this problem for a lot of investors, and we launched an FOF, which is a fund of funds for the ETF. But I think the good thing is that we're working with a few market makers today, and they are ensuring or they are making sure that you get really good live prices. So I think any investor who is looking to buy the ETF or the FOF, I think because of market makers who are sort of controlling liquidity and making sure that prices are very close to the underlying NAV, I think investors shouldn't worry of lack of liquidity in these ETFs. And sorry, just to follow up, in terms of taxation, all international funds are taxed as debt. So I think anyone who is looking to sort of invest in the Nasdaq, if you stay in the fund for 3 years and above, then I think because of indexation benefits, it's the same as equity. So I think it's taxed as debt, so it's 30% the first year. But I would advise people to invest this for a very long time. So and the longer you invest, the lesser the tax because of indexation benefits.
Okay, it's a follow-through question. Nasdaq 100 is trading at very high valuations and very high PE in comparison to historical values. Do you think there is time for correction, and we should rather invest in broader US markets like Franklin, maybe a Franklin US blue chip or an ICICI US blue chip?
Okay. Yeah, it's a good question. So we've done the analysis, and so we've done it over the last 15 to 20 years. And what we've seen is that the Nasdaq PE is still at above average of what it used to be. So in my opinion, it's not very expensive at this point of time. And the reason why it's not expensive is because the earnings have been very powerful. All these stocks have actually done super well. And if you see just and I mean, if you just look at the top 5 stocks on a PE ratio basis, they're still not very expensive. So I think PE ratio is, yes, it's higher than what it used to be, say 2 or 3 years ago, but earnings have been quite strong. Apart from other funds, I think people need to understand that all other funds, I can't sort of comment on specific funds because it's sure. I can't do it in compliance. But I think Nasdaq is actually a passive fund, and as we all have seen, so what the US has happened is passive funds have taken off in a big way. So anyway, in the US, I think a default investor would buy a passive fund, and I think being a passive fund, I think it comes at a low cost. And also, if you're worried about PE, then yes, the growth opportunities from today might not be as much as what has happened in the past. But as I said, don't do it for the returns. Do it for dollar hedging and do it for diversification, and you'll be happy. All investors should understand that what has happened in the past is a bit of a bull run. So I think if you're investing just because of returns, you will most probably be disappointed. So I would say, do it for sort of other reasons, other than just like crazy returns.
Okay. The next question is Nasdaq 100 is very concentrated portfolio, where top 10 holdings contributes to greater than 50% of the portfolio.
Okay.
While the balance 90% company's contribution is insignificant. Does it make a case of concentrated risk?
Well, yes. So there is some bit of concentration risk in Nasdaq, but I think any index today. So if you look at the S&P 500, so the S&P 500 is the biggest index in the world. It started around 1976, and it still survives today. And this concentration has actually happened multiple times in in that 50 and in those sort of 50 years, and the S&P 500 is today, after 50 years, the biggest and the most traded ETF in the world. So what we realize is that concentration risk is there, but it's always not very long term, and indexes do sort of normalize over time periods. I'll give you a simple example. So someone said that the Nasdaq top 10 stocks is around 50%. The S&P 500, which is the top 500 stocks in the US, the top 50 stocks is around 60%. So actually, compared to a much bigger index, which is the biggest index in the world, Nasdaq is actually a lot more diversified because the top 10 is a lot smaller holding. But yes, I agree. There is concentration risk there, as it is in India, as you see. But anyone who's looking to invest for long-term periods, shouldn't be worried, because I think it's the financials of those companies underlying that drive the index, and the fundamentals of the company are intact, and the financials also are intact. So I mean, in terms of performance, I think investors should be worried.
Sure. The next question comes from Mr. Ajinkya Kulkarni. Is it advisable for an amateur to enter into Nasdaq?
Yeah, I think anyone who's looking to build a portfolio should do it via asset allocation. And international investing, as I said, should be a part of your asset allocation. So I would say every investor should put a minimum of, or put about 5 to 10% of the portfolio in international funds, because it's giving you that, it's lowering your volatility of the portfolio, and it's also giving you dollar-based returns. So I think if it's amateur, if it's expert, I think it's good to have some international exposure in a portfolio today.
Okay. Next question is from Mr. Shrikant Mudaliar. What are the possible risks we are exposing ourselves through this fund? Please rank the top three. You mentioned about the dollar hedge. Does that mean that if rupee becomes stronger, this asset will depreciate?
Yes. Yeah. So it's a good question. In terms of risks, I think yes, if the rupee does appreciate, then the Nasdaq value will obviously fall, because we don't hedge currency at a fund level. So we promise investors to get pure dollar sort of returns. So whatever stocks we buy, on a daily basis is we don't hedge it at all. So, but having said that, it's important to understand that that depreciation or appreciation is a factor of inflation. And as long as inflation in India is higher than inflation in the US, the rupee will continue to depreciate. So I think that is what you're playing on. So we internally think that the rupee will continue to will sort of continue to depreciate even over the next 5 to 10 years time. So investors can sort of take advantage of that through the Nasdaq. And in terms of other risks, I think there is some element of tech companies that are a big part of the index. So I think the tech sector is what's driving a lot of stocks in the US and globally as well. So I think any sort of risk that comes in the tech sector will have an impact on, I would say, every index, every global index in the world. So I think that is what I think. So even though I think tech stocks will continue to do well, any sort of global risk on tech will have an impact on the Nasdaq. That's number one. I would say number two is I would say even valuations. So I mean, if not now, but maybe 2-3 years from now, normally what we've seen is high P ratios equal to lower returns in the future. Even though Nasdaq P's are average, if it continues to rise at the same rate as it has in the past, then obviously it will be more expensive. Although I don't feel expensive now.
Okay. Next question from Mr. Abhishek. What will be the return differential between investing in Nasdaq ETFs versus FOF?
Okay. Yeah, that's a good question. So the return difference is quite minimal. So far, yes, the FOF is only launched around 12 to 30 months ago. So it was a very small fund. I mean, it was zero basically, and now it's around almost 275 to 300 crores. So what we've seen in index funds, or at least passive funds, is the bigger the fund, lower the difference, tracking error. So we can expect the difference to be quite minimal. So and also I think people to understand the difference between investment in ETF versus an FOF. In ETF, the cost of brokerage, the cost of STT is borne, or the cost of sort of other sort of fees related to demat accounts is borne by the customer, whereas in FOF, the AMC borrower or the customer sort of shares the cost at a pool level. So I think if you're an investor today in both, I think the return should be pretty much in line if you account for those two things.
What is the capital gains treatment for ETF and FOF? This question comes from Mr. Sanjay Pradhan. I think we just covered that part.
Yeah, so if both are taxed as debt, there's no difference. So they're assumed they're treated as debt funds.
The taxation will pertain to a debt taxation.
Exactly.
Basically,
Yeah,
indexation after 3 years.
Absolutely.
Or if it's before 3 years, it gets added to your income and your tax at your marginal rate of taxation.
Absolutely. Got it right.
Okay. Expense ratio for ETF and FOF. How does the FOF work? Again, follow through.
Okay. No, these are great questions. So the ETF is the security that actually buys the underlying stocks. So as an investor, it's important to understand that this is not a feeder fund. I'm not buying a Nasdaq fund in the US. As an investor of the ETF, the investor actually owns all these stocks. So you are actually a shareholder of Apple, Google, Facebook. So that's the ETF. The FOF is actually buying units of the ETF. So in terms of cost differential, the ETF today is 50 basis points. So 0.5% is the cost of an ETF, and the FOF on a direct plan is 10 basis points, and regular plan is 40 basis points. So an investor can who's investing in FOF is paying about 60 or 1%, 50 basis points of 1%. Yeah.
Okay, another interesting question. Lump sum investment or monthly SIP from Mr. Lokesh?
I would recommend monthly SIP.
Okay, that was a very quick reply. Thank you. Yeah. Okay, from Mr. Naveen Singh, is Nasdaq 100 FOF also the same? I guess he.
Yes, yeah. So the FOF is basically buying the ETF. So the fund of funds is the fund of funds of the ETF. So basically the ETF is a security that's traded on the exchange, and the fund of funds is very similar to a mutual fund. So you can buy it and sell it like any other mutual fund.
Any lock-in period and tax implications while booking profit? So tax implication is the same debt taxation, the way it gets treated. Lock-in period, any lock-in period?
No lock-in periods. There's no exit load also.
Any taxes charges for NRIs from Mr. Lokesh?
No, so it's actually an Indian-based fund. So the tax treatment will be exactly the same as any other sort of investor.
Okay. What is the expense ratio for Nasdaq 100 FOF? I think we'll just cover that quickly once.
Yeah, so the ETF is 50 basis point, 0.5. The FOF direct plan is 10, which is 16 total, and regular is 1%.
Okay. How much is the daily trading? I guess he's asking on the volume front of Motilal Oswal Nasdaq ETF from Mr.
The daily trading values differ a lot depending on the inflows and outflows. But I think I can't give you. I mean, I can come back to you on the exact figure, but it's increased a lot more than. I think it's one of the highest traded exchanges because securities because of the amount of volume that we've got over the last 6 months. But I can get back to you with the number.
Oh, yeah. Thanks. Okay, from Mr. Ravi Chandra, refer to the present market scenario, which is the right time to invest for a short and long time.
So I recommend nothing to invest in a short time. I think short-term investing, if you want, you can park it in liquid funds. But anyone who's looking to equity should only invest for a long time. So I mean, it can be any mutual fund. Please invest for at least 3 to 5 years plus. Anything less than that is you're harming yourself in the long run.
Okay, from Mr. Somain, you have a Nasdaq fund also. What is the difference?
Yes, yeah. So we just to give you I mean, it's the ETF is like a security, a trade on the exchange, whereas the FOF is a mutual fund format of the same security. So anyone who does not have a demat account or wishes to set up an SIP or whatever it is can use the FOF. In terms of price differential, there's not much difference. So I think it's almost the same because for someone who's buying the FOF, they're paying 10 basis point more, but at the same time you're also paying sort of STT brokerage that gets covered. So I think both are, I would say, very similar to each other. It's depending on what the customer wants.
Okay. From Rekha, will the investment in this fund fall under the liberalized scheme which has a cap of 2,50,000 USD?
So this is a very good question, and this does not fall under LRS, which is the liberalized remittance scheme. So a lot of our customers actually today are the ones who've actually exhausted their LRS amount, which is 250K US, and they've actually, for them to get more dollar exposure, they've actually invested in this fund. So this is exactly the same benefits of someone who's trying to do LRS, but this doesn't come under the purview because it's an Indian domicile fund. So yeah, so that's the difference.
Sure. Thanks. From Mr. Puneet, I was investing in SIP Nasdaq 100 ETF since 2015, but I have not received any dividend. So how does it work? How it pays dividends to?
No, I'll have to get back to you, but I think what's important to understand in dividends is that the Nasdaq, so the US has a withholding tax that they apply on all dividends, and the withholding tax is around 40% of your dividends, which is so if your dividend income is around 1%, around you will get back around 0.6 to 0.7% every year back to the fund. So I think you must have got the dividends. I mean, I can get back to you specifically on this query.
Yeah, Mr. Puneet, we'll get back to you separately on that.
Thank you.
Is there any plan to bring true international fund from Motilal Oswal where investment is actually diversified in US, Europe, Japan, China, and other emerging markets depending on the market situation?
Okay. So we are big believers of global index funds. So the problem with having global index is because of time difference. You know, if I'm having a fund in Japan, if I'm having a fund in US, you know, because of time difference, I have to buy them at different times. So I'll have to have someone who's buying and selling all the time. Causes a lot of issues. But we are looking at global indexes. We'll be looking at launching maybe one or two this year. So yeah, stay tuned.
Okay. Is better to buy ETF or FOF?
So it depends on the investor. So if the investor wants to buy it off the exchange, then then you can buy the ETF. Both are, I think, in terms of returns, are pretty much in line, especially at the current sizes. So yeah, I think whatever is more convenient for the investor is what I would recommend.
We'll take the last two questions, which are already there here. When you buy FOF, do you not own the stocks of the invested companies?
Yeah, so when you own the FOF, you're actually owning a part of the ETF, which is which is owning the company's underlying. So I would say it's exactly the same. You know, just a layer on top. So you are still owning all these really fancy securities if you're also buying the FOF. So yeah, it's very similar. It's almost the same.
Fine. And here comes the last question. What are the other similar ETFs offered by your passive fund division?
Yeah, so within the passive funds at our AMC, so we have 10 passive funds. So this is 6 index funds, 1 Nasdaq FOF, and 3 ETFs. The idea is to sort of have all the options there for the investor. So today, so we have two Indian large cap funds. We have 1 mid cap fund. We have 1 small cap fund. We have 1 Nifty 500, which is the multi cap fund. We also have 1 bank index fund, which is a sector fund. We have the Nasdaq, and we also have 2 ETFs, the Nifty 50 and the Nifty 100 mid cap funds. So we have a range of ETFs and index funds, and the idea is to go out there and investors can use our funds to do asset allocation strategies at low cost.
But I mean, thank you so much, Mr. Pratik, for a wonderful session. It was a marathon of questions that we really saw today and very well answered. And just the last bit, how do you access this? Log on to your site, HDFC Securities.com. Once you log in, just below the ticker, you will see a tab called Other Products, under which you can look at ETF. And on the symbol tab, just type Motilal, you will automatically get this fund, and that's how you can access this fund. So with that, we come to the end of this session. Thank you so much for joining in, and thank you so much, Mr. Oswal, for a wonderful session. It was a pleasure having you here. Thank you very much.
Thank you. Thank you. Thank you so much, guys. And please feel free to get in touch with me on LinkedIn or Twitter. I'm always answering questions. If any questions, please get in touch with me. And if you have any queries, please also get in touch with our AMC, Motilal Oswal AMC, and you can go to our website for any details on any of our funds. And thank you, Ganesh, and thank you, HDFC Securities, for having me here. Really appreciate it.
Thanks a lot. Pleasure.
Thank you.